Hi everyone, thank you for joining us early and tuning in to Uncovering Trading Strategies with professional trader Kar Yong. So the session will begin shortly. The time now is 11:56. So we will begin sharp at 12 p.m. So kick back, relax, and we will see you shortly. Very good afternoon, ladies and gentlemen, clients of Phillip Nova. So today we want to welcome you for joining into our session of uncovering trading strategies with professional trader Kar Yong. So thank you for joining us early for those who have came in. So I'm very excited to share with you what are we going to cover today, right? So there are three key things that you're going to pick up from here today. Number one, pattern recognition, right? How can you spot repetitive price patterns and understand their significance in predicting market trends? Price and time targets to discover guidelines for setting price targets and estimating duration of market moves, so which helps you to manage risk and maximize your profit. And last but not least, understand Elliott Wave theory and how it can be adjusted to dynamic market conditions. So today we have with us professional trader Kar Yong, and I'm excited to share with you a bit about who he is. So for those of you who have joined us over the past couple of sessions, he's no stranger. So Kar Yong have had his time in the market, right? He has started trading with just a humble $500 since he was 21. And within 2 years, he's managed to turn this amount into 13,000 USD. So due to his success, he has been featured in various media outlets, right, such as Singapore's channels News Asia Money Mind. He has been awarded multiple awards such as the most popular FX trainer in APAC and top Forex analyst in Asia by WikiFX. So he was also recently awarded the best digital marketing trader by Trading Live. So Kar Yong definitely is not new in the scene. He has been a partner with us for multiple sessions, and we're excited to what he can bring to you today. So without further ado, I'll hand this time over to Kar Yong. Kar Yong, over to you.
All right, so good afternoon, everyone. Okay, so I will jump straight into today's topic over here, but I'll just lay some very quick groundworks so that everyone is kind of familiar in terms of what is the current structure and moving forward, right? So this topic itself, Elliott Wave, naturally we won't be able to kind of squeeze and cover everything in an hour kind of session, right? So we'll actually take it step by step, and of course, the next sessions that we're going to have on the Elliott Wave topic is going to be on the 7th of August. Okay, so just very quick one here to let you have a overview to understand that what we cover today naturally will not be able to cover in terms of a very comprehensive and whole topic about it. But what we're going to do today is to build up a strong foundation, and then for the next session we're going to add on to that from what we have covered from today's session. Okay, but having said that, today's session here is definitely one of the most important aspect in Elliott Wave. Again, a lot of times when some traders come to me and say that they would like to learn about Elliott Wave, they get confused about it. It's what I figured, what I've kind of thought of is a lot of other traders do not understand the foundation of Elliott Wave itself, right? Because we have the impression that it's all about labeling the charts 1, 2, 3, 4, 5, ABC. Where do I start to put my 1? Where do I put my ABC and things like that. But before we even jump into that stage, you first need to understand the basic principles, or I would say the foundation principles of what Elliott Wave really is. Okay, and that's what we want to achieve from today's sharing. Okay. And what I'll do over here is also later, if time permits, right, I'll also jump into some of the live charts to show you some of the application of the concepts that we talk about in today's topic over here. so they can relate to, you know, how is it being actually translate into a live market, how does it being applied in our day-to-day trading. All right. And of course, we do have some time allocated for Q&A as well. Okay, so as we progress over here, do pay attention. If you have any questions, feel free to just type it into the Q&A box. Now, I may not be able to answer all the questions in the time for today, but do still put in your questions there, because if, let's say, we can't answer your questions, we may be able to still collate it and then answer it maybe via email, right? Good. So I'll skip off a little bit about my self-intro here. Let's jump straight into the topic. But before we do that, again, I just want to very quickly show you some of my own personal trading results from 2022 as well as this year over here. Very quickly, the objective is to share with you that the things we cover is not theory. Okay? They're definitely very practical and things that I actually apply in my own trading as well, right? And this is something I want to very quickly establish the confidence in yourself, so that you can really pay attention to what we have to cover today, apply them into your own trading. Okay, you may not just, you know, plug and play directly, but for some of you who are more experienced, perhaps what you can do is find out certain things that you find useful in today's sharing, implement it into your trading, combine it, okay, and hopefully it can give you more value and help you to kind of, you know, improve certain aspects of your trading, right? So as I mentioned, today we'll talk about impulse and correction, which again is a very, very strong foundation of Elliott Wave. Some of you who have maybe, you know, joined us in some of the various sessions and stuff, you'll probably have come across this before. You know, again, I would always like to take it and say, use it as a recap if you actually heard of it before, kind of refresh on your memory. Okay, and this is to me the building blocks of Elliott Wave. Now, if today you don't have a very strong understanding and application of impulse and correction, and you try to use Fibonacci, you try to use some kind of labeling in your charts, you know, try and find out where do I get in, where do I get out, it's very, very difficult. Right? So the first step is always have a very, very strong understanding of application or impulse correction, because that itself will very quickly and very effectively determine the directional bias for you, right? Directional bias simply means you look at the chart in a split instant, you know whether you want to be focusing on a buy or focusing on a sell. Now, naturally, it's not going to be 100% thing. There's no such thing as in trading that gives you 100% hit rate or accuracy. But this method over here can give you as high as somewhere between 60 to 70% hit rate. Okay, so it's actually a fairly high accuracy kind of method to approach the charts, as well as a very effective manner, which means you don't need to spend like hours, okay, looking at the charts. Within a split second, you can actually know whether you want to be focusing on a buy or a sell. Right now, so very, very quickly, just share with you some of the experience of other traders just based on impulse correction, right? So you can see, you know, again, the objective over here is to really let you gain that confidence in the things that we're going to cover today. And more importantly, I want you to be focused. Okay. So you can see over here, you know, this person, Calvin, actually shared, you know, just based on the patterns and impulse correction, there's no fibs, nothing fanciful, you know, he's able to actually gain value from it. Some traders actually take it and start making some profits from it. You know, this one is another trader that says that with this technique, he feels more confident. He has the clarity in terms of whether to focus on buying and selling. You know, there's a good accuracy as well, right? Naturally, that's the important aspect. Okay. So with all that said, let's jump into the content and the presentation that I prepared for you guys today. Right, so let's start off with understanding and have a clear way of approaching the market in looking at impulse and correction, right? So what is impulse, what is correction? Okay, if today you open up a technical chart, okay, whenever we say technical chart, it means doesn't matter the time frame, doesn't matter instruments, it can be currencies, it can be commodities, it can be US indices, you can be stocks. Okay, as long as there's a chart, okay, a chart itself is made up of two axes, right? One is price, one is time, right? So with that, it means that every pattern and every development on a chart essentially breaks down to price. So when we talk about impulse and correction, we're basically studying price and time, okay, these two factors. So price and time, right? So impulses basically where it has a huge movement in price and a very short duration in time. Okay, so the term that we use to describe are usually strong momentums in the market. Okay, or we'd say the price developed significantly in a relatively short period of time, right? So we use words like that to describe strong momentum. It moves very fast in a the price chart actually is very obvious in a particular direction. Okay, so that is what we call impulses, right? Let me show you a chart to illustrate the visual understanding of what impulses really is. Okay, so this can be applied on any time frame because we're talking about price and time, right? If you're looking at the daily, you would have daily impulses. If you're looking at a 4-hour chart, you would have a 4-hour impulse. If you look at a 1 hour, 1 minute, 15 minute, same thing, right? Every time frame would have its own impulses move, right? So if you take a look at this chart very quickly, you can see this move down is fast, right? Relative to some of the recent moves, you can see here is slow. Okay, this is slower, but this is fast, this is fast, this is fast, this is fast, right? So those fast moves are basically what we call impulses. Okay, giving you more example, this move down is fast, this move up is fast. If you're a bit familiar with candlestick formation, you also start to realize that impulses, usually the candles are relatively bigger, and if you put it into color, right, bullish or bearish candles, you tend to realize that impulses have a consecutive run of either a bullish candle or a bearish candle, depending on the direction of up or down. Right. So over here, you can see more example, right? This is impulse. You can see again, as I mentioned, the candle body is huge. They have a consecutive few runs of red candle. Okay, same thing here. Candle is going up fast. It has a consecutive white candles, and then over here is fast move down. Okay, so impulses are basically very fast moves. Okay, not too difficult to understand, right? It's quite straightforward, it's quite simple, but yet it's a very, very powerful way of dissecting a chart. Okay, and it's very important. So that's impulse, fast move. Okay, then of course, if the market is not moving fast, then naturally it needs to move slowly, right? Because time, there's only two ways to describe fast and slow. Okay, so if it's not doing fast, if it's not impulse, then naturally the market is developing as a correction. So correction is basically the opposite. Okay, it takes time to develop, it's slow, it's not really going in a very, very strong direction when the market is developing as a correction. Okay. So correction wise, it can be, what we call a sideways range. Basically, you just literally go flat. Okay. Or a correction can also be developing as a slanting up move or a slanting down move. So again, now this move here, you can see is slanting to the upside, but it's very, very slow. Okay, this move here is sideways. It's not going anywhere. It's taking a long time to develop and it's just chopping around. Okay, this one here has a slight element of slanting to the outside here as well, a little bit. Okay, now the characteristic of a correction, you also start to realize from a visual point of view, the candlestick tends to overlap a lot, right? Overlapping means, there's maybe one or two reds, one or two whites, one or two reds, one or two whites. And this is what we call an overlapping move, right? So you have bullish candle, bearish candle, bullish candle, bearish candle, and the market chops around. Okay, so anything sort of something like that, we label it as a correction. Okay, so if I give you an example where it's clear between impulse and correction, you can see here, fast move, slow move. Okay, fast move, slow move. Okay, so some charts can be visually very clear. Where are the impulses? Where are the corrections? Some charts can be a little bit more challenging. Okay, so these are clear examples, right? Fast drop, huge candle, consecutive rate, choppy environment, correction, huge drop, big candle, impulses, right? Same thing here, huge and fast drop, correction. So these are clear. Okay, what about something like that, right? So over here, if you take a look at this, it does carry an element of both impulse and correction, right? It seems to be coming down relatively quite obvious. There is certain element that is carrying it, looking like it's coming down quite fast. But at the same time, you look at the candles, it's like quite a bit of overlapping as well, right? You have red, white, red, white. So things like that, sometimes you get like, in terms of trading, we call it not sure. Okay, so when things like that pop up, okay, as a trader, you do not need to force yourself to come to a conclusion and say, is this really an impulse or correction, right? So when things are not clear, my take and my suggestion is always just move on to the next opportunity, or just keep this aside. Don't pay too much attention to this. Focus on things that are clearer on your watch list. Okay, so you are bound to actually experience something like that, right? From time to time, you open up a chart, some instruments that you're trading, you'll come across environment like this. Okay, so do not feel that that is the right answer, or it feels that you need to actually kind of get the answer out of this. Okay, for me, I always look at this. If we see something like this not clear, I'm not confident in it, I move on. Okay, so don't overcomplicate the whole process. Focus on charts that are giving you very clear impulse or correction, things that you can identify with, things that you are confident in. The others, give it time to develop, put it aside. Eventually, it will develop into something that is clear for us. Okay. So with that said, okay, just now I mentioned a little bit of the nature of a correction. It tends to be slow moving, right? It tends to be wavy, which I use the word overlapping, right? So some red, some white, some red, some white. Those are the colors of the candles that I use. And today, okay, if you open up a chart and you start to observe, well, there's a lot of impulses one after another. Okay, that means you see a lot of up, very strong move, down, very strong move, up, very strong move, down, very strong move. Usually this is indicating to you that we are likely in a big corrective move, right? We're in a big correction phase. So the suggestion and the tip over here is you can consider to shift your time frame to a higher one to gain clarity on what's happening. To give you an example, right? So if I open up a chart and realize that, in this chart, it's a little bit difficult to decipher, okay, in terms of like, where are the impulses, where are the correction? It seems like, this goes up very fast, this came down relatively fast, up fast, down fast, up fast, down fast. Basically we have a lot of impulses in this screen. Now, whenever you kind of start to observe something like that, the tip is to go on to a higher time frame. Now, suppose this is a 1 hour chart. What I can do is I can actually zoom out to a 4 hour chart. Then I'll gain clarity, right? Then what I realize is, oh, just now what I'm observing on the 1 hour is essentially everything here. And when I decide to go on a higher time frame perspective, I start to gain clarity and say, okay, now I know why is there so many impulses, because inside it is actually a corrective phase, right? So you can see on a higher time frame, it's just chopping around sideways, okay? And that's what we call a correction. Okay, so these are some I would say very, very important foundation for you to establish if you really want to pick up Elliott Wave methodology. Okay, that's how I actually pick up, that's how I actually learned about Elliott Wave. Okay, because at the start, right, I'm just like everyone trying to figure out, where do I start labeling 1, 2, 3, 5, where do I put ABC, where do I pull my fibs, all the fibs relationship between each wave. I initially started off like that, and then there was a period where I just say, okay, this is just too confusing. Okay, it's just not practical. And then I put that aside, and then I went and explore other methods of analysis. And then, of course, at some point in time, I decided to come back to really dive deeper into like understanding how can I actually use Elliott Wave to analyze and trade the market. Okay, and that's where I start to have that kind of like aha moment to start studying the elements and the principle behind it, rather than the labeling and the fibs of it. Okay, and that's where I start to connect all the dots, right? Like from understanding impulse and correction, okay, we start to identify certain patterns, and then with those patterns, we have a strong probability of a certain direction. And then from there on, we add on more layers of labeling charts, Fibonacci relationships, and things like that. Okay, so that itself, right, from impulse and correction building up phase by phase, step by step, it's what makes it very practical, and I would say easy to implement. Okay, especially for people who are very new in Elliott Wave. Okay, so I hope that's clear so far in terms of like impulse and correction. It's, again, I always highlight, it's simple. Okay, and things that are simple, often traders would neglect it because they think that, oh, it really cannot be that simple, and then they brush it off. Okay, but I just want to keep emphasizing that whatever we cover on impulse and correction right now, the understanding of it and your ability, the confidence to identify it is very, very important, right? That's like the the foundation. If you don't have this very strong, whatever you build up on in terms of Elliott Wave itself is gonna crumble if your understanding of impulse and correction is not really solid. Right? So once you have that kind of ability, that kind of confidence, of course, it comes with practice, right? It comes with chart time as well, which means you need to spend a little bit of time to really train your eyes to get accustomed to impulse and correction on chart. Then the next phase over here is where we're going to start to do some kind of a combination, right? Now, the beauty about technical analysis is whatever method you use, whatever strategy you use, I always share with traders, at the end of the day, as technical analysts, we are looking at patterns. Okay, you can call it various names of strategy, but at the end of the day, it's pattern. Okay, now what is pattern? Pattern is basically something that tends to repeat itself over and over again, but more importantly, it gives you certain sense of reliability. Okay, so a pattern comes in two elements, what we call reliability and repeatability, right? Of course, if something that only happens once every 10 years, or maybe once every 7 years in terms of recession, it's not very repeatable, right? So as a trader, you can't really make full use of that because you need to wait very long before the next one comes. Okay, so when we are training, we need to identify certain patterns that tend to repeat itself sufficiently, right? Which means it happens very frequent so that we can capitalize on the opportunity. The second aspect of pattern is reliability, right? Of course, if there is no probability that we can rely on, there's no accuracy that we can rely on, it doesn't make sense to be trading the pattern, right? So over here, when I share with you these three combinations, essentially they are patterns that, number one, tends to repeat themselves very frequently on a chart. Doesn't matter what time frame you're looking at, they tend to repeat themselves often. Okay, so far, week on week, day to day, we always can identify patterns. Okay, so it's really very frequent. The reliability of it, as I shared with you at the start, is about 60 to 70% probability. Okay, now I want to just stress a little bit on this as well to kind of give you the right expectation of what we mean by probability. Because whenever I say 60 to 70% probability, a lot of times the first thought that comes to you is, great, out of 10 trades, I'm going to win 6 to 7 trades. Now, probability doesn't work like that, okay? Because what can happen over here is you may also sometimes experience a string of losses, okay? A string of occurrence where the pattern doesn't play out, okay? But if today you only look at maybe 3 trades, right? Let's say you take the first 3 trades based on a certain pattern, it didn't work out exactly, and then you jump to the conclusion that, well, it's not 60 to 70% chance, it's not 60% accuracy. That conclusion itself is not a valid one simply because your sample size is too small, right? So this one here, when we mention about probability, you also need to understand some principles about statistics. Okay, when I say 60 to 70%, I'm not looking at 5 trades, I'm not looking at 10 trades, right? I'm looking at over the years, looking at patterns, trading them, okay, which equals to sample size of more than like 50 to 100 trades. That's where we arrive to about 60 to 70% probability. Okay, so I just want to set the expectation right. Okay, so what are these three combinations? What are these three patterns? They're essentially made up of impulse and correction. Okay, so think of it as you understand the foundation, the building blocks of impulse and correction. Now, what you're playing with is combination of it, permutation of these two. Okay, so the first one here is essentially you take an impulse, you combine it with a correction, right? So we have like mirror effect, right? So we have up impulse, down impulse, slanting down correction, slanting up correction. So this one here, if you are very familiar with technical patterns, you might see this quite similar to what we call a flat pattern. Okay, to me, you can give it any name, right? I sometimes joke around, you can give it, a girl's name, it's fine, right? You can call this like maybe what, Sandra. Whenever we see Sandra, we have a trade. To me, the names are not the crucial thing, right? I think more importantly is how it looks like, right? Visually, the pattern itself. Okay, so you can call it a flag. From Elliott Wave perspective, we call it a zigzag. Okay, so essentially the impulse built in will be a 1, 2, 3, 4, 5, and then the correction will be an ABC. That will be a complete cycle of a 5-wave move plus a 3-wave move, and Elliott waivers will call it a simple zigzag. Okay, so don't complicate yourself and confuse yourself by trying to memorize the name. But the first thing is visually put this pattern into your memory bank, right? So in the event when you open out of a chart and you see something similar to this pattern, you know what it is, right? So this is the first one. The second one looks like a V, right? So you can see here, this is an inverted V, this is a V. We just call this a V shape. Okay, this V shape is built up from 2 impulses, right? So you can see fast up, fast down, fast down, fast up. Okay, and then the last combination over here, for me, I just call it a crawl. Okay, now if you're familiar with this pattern from a technical point of view, traders would call it a diagonal, traders would call it a wedge. Again, the name doesn't matter. Just give it something that you're aligned with. Now, for me, I just call it a crawl simply because when I look at this pattern here, it kind of reminds me like, at the start, if you're climbing a mountain, okay, you have a huge momentum, you have a lot of energy, a lot of excitement, you just keep going very, very fast. And then as you continue that climb, you start to get a little bit tired. Naturally, the higher you go, okay, the oxygen level drops, it gets a little bit more challenging. And you continue the climb, but at a slower pace. Okay, so to me, it's like, wow, very tired, and you still want to go, but you don't have energy, so you start to crawl. Okay, so that kind of like have the analogy of it. Okay, now some of you may be a little bit confused between number 1 and number 3. Okay, so the frequently asked question I receive is, what's the difference between a correction and a crawl? Okay. So the slight difference, if you actually observe this illustration over here, number 1, it's actually coming down slow, whereas the impulse is fast to the upside, right? So the move that is corrective is actually the opposite direction of the impulse. Okay, so that's like the definition of it. But if you actually look at the visual perspective, it's quite obvious they're different. Okay. So if you're not familiar with the visual, right, because some of us are not so much of a visual person, some of us are a little bit more of a listener or, a text version kind. So for the benefit of everyone, I'll describe on that. Right, so you can actually look at it from a perspective of a correction here, okay? The impulse is up, the corrective move is the opposite direction of the impulse. Now for a crawl, the impulse is up, the slow move, okay, or the corrective nature of the move is in the same direction of the impulse. Okay, so that's how we differentiate these two. Okay, now the differentiation of these two is important because the direction that you want to focus on your trade is going to be very different as well, right? One is buy, one is sell. Okay, it's an opposite thing. Okay. So let me dive into the details of these 3 patterns, okay, to give you some examples as well, okay, to illustrate how is this being done. Now let's talk about the first one, impulse correction combination, right? So whenever we see this, we do have a potential trade opportunity, right? Or what we call a trade setups, right? So in trading, I always give this clarity to traders. Okay, we need to get 2 things right. We need to get the direction right, and at the same time, we need to get our timing pretty right. Okay, so direction is basically, do you want to focus on buy, do you want to focus on sell, or you don't have a clear sense of direction, you just avoid the trade, right? So direction wins you half the battle. Okay, because if today you pick the wrong direction, then obviously you will lose a trade, right? But if you pick the right direction and you execute a trade not at the kind of like quote unquote the optimum time, the psychology will kick in and then it might also affect your trade. Okay, so getting the direction wins you half the battle. The other half of the battle is the timing element. Timing means when do you get in, when do you get out, whether you are right or wrong, how do you manage to trade, right? So those are all about timing. So when you can actually work on these 2 elements here, okay, and you combine them together, when you get the direction right, you get the timing right, it's a very, very easy trade, okay? So over here, when we're talking about all these patterns, it works on more on the element of direction, okay? So it can help you win half of the battle with high probability, right? So when you see an impulse correction combination, there's a good chance where the market is telling you, I want to move in this particular direction. Okay, so directional bias, whenever we look at this, is we want to focus on the direction with the with the impulse, right? So if the impulse is up, we focus on buy. If the impulse is down, we focus on sell, right? I'm going to give you examples on this. Right. So we work on the reliability aspect of it first, right? I just want to show you, how this pattern has behaved in the past, okay? And that's the part where we study it. We know that there's a certain high accuracy, and then we take it into the application phase when we are trading, okay? So these examples that I'm showing you here obviously is already done, but it doesn't mean it's not important. It's not important to you today as a trader because you can't take opportunity of it anymore. But it's important for you to build that confidence, knowing that this pattern has certain sense of reliability. Okay. So if you take a look at this, right, we have an impulse up with a correction here. This is what we call an impulse correction combination. So when we are studying patterns, right, you want to observe after this combination, the market went up fast. Great. Okay, that's what we want. And then after this impulse move up, we see another correction, and then we observe after this, what happens? The price actually went up fast. Great, that's what we want, right? So from this case study here, we can start to establish the reliability of this pattern, right? Every time we see an impulse correction, we expect the upside. Every time we see the impulse correction, we expect the upside. And we expect this upside to be fast, okay, to be established as an impulse, okay? Same thing here in the flip side, right? As the market is coming down, fast impulse correction down, right? Great, that's what we want, right? So we're starting to observe certain sense of reliability. Okay, whenever we see a fast move down, a sideways move, we expect more downside. Okay, and the next downside we expect it to go fast, right? Fast, slow, sideways correction, down, right? Great. So these are all case studies, which means it starts to build up that confidence, right? In whenever we see this pattern, there's a good chance we're gonna get it right, okay? Following the directional bias as I shared. Okay, now how then we apply it into our trading, right? So this is already history. It has happened. Okay, so what it means to you as a trader is when in the future, when you see a pattern that looks similar, it may not be 100% the same, right? Obviously, but if you see something similar, it kind of indicate to you that there's a good chance you can prepare yourself for a particular direction. Okay, so look at this here, right? We have a fast impulse up, we have a correction that's going sideways as of now. So this gives you an idea. What pattern has we studied, right? So basically it's an impulse correction. This tells us there's a good chance of an upside. So what we have right now whenever we see something like that is I'm not interested in the sell, okay? Because I know when I see this pattern, I see this combination in the market, there's a good 60 to 70% chance it will go up, and it will go up fast. So why would I bother selling it, right? I would rather focus on, do I get a buy opportunity? Can I look to buy into this because I have a higher chance of winning? Okay, so that's the idea, right? You can see that phase from how we study a pattern into the application aspect of it in determining whether we should be buying or selling. Okay, so same thing, right? If I just flip it, if we see a down move that's very fast and then we see a sideways corrective move, this combination tells me don't buy, right? Focus on the sell. You have a higher chance of getting a winning trade, right? So again, not complex, right? We haven't really even talked about label. We haven't talked about fibs and things like that, but this is very important, okay? As I mentioned, if you can't get the direction right, you lose half the battle, right? So to win the battle, you at least get your 50% right first, which is the direction to focus on, okay? So this is something that is, I always stress, is easy. Okay, okay, easy is a very kind of like different people will feel it differently, right? Depending on experience, right? But I would say it's not complicated. It's not something that it's not rocket science. It's not something that you need to really spend a lot of time to study it. Right? It takes a little bit of practice because it's a visual thing, right? Obviously, you need to get used to it. You need to train your eyes to spot them, but it's not difficult. Okay, I would say you spend maybe you allocate about 30 minutes to an hour in a single day, really focusing on training your eyes to get in tune with this pattern. You can get it done. Okay, It sounds easy, it feels easy, but it's very, very important, right? So this is one of the pattern. Okay, then the second pattern, I think this is even easier because it's a V shape, right? It's basically two very fast moves combined together. Whenever we see something like that, I always say, don't touch the market, give it time, leave it aside first, because when you see a pattern of a V shape and you try to trade it, there is no advantage to you. Okay, it's like gambling, right? 50-50, then you might as well don't touch it. You focus on the high probability one, right? So when you see a V shape, things like this here, comes down very fast, goes up very fast, that's a V. And then after that V, you see it goes up very fast, it went down here pretty fast, so that's also an inverted V. So within this whole phase or this whole cycle here, you don't trade, okay? Simply because there is no advantage whether you should be buying or selling. It's just anyone's best guess, right? And then as a trader, you don't want to be taking an action or making a decision just simply because it's a best guess, right? You want to make sure that there's certain statistical edge to support your decision, okay? And whenever we see a V, just avoid, okay? So see here, right, a lot of V, okay? You can actually observe quite a lot of V's in the market. Or if it's not a V, it can also mean that it's just an impulse, okay? So if you actually look into like recent markets, last Friday, NFP, some of the market actually ends off as an impulse, right? Case in point, like if you just look at euro dollar, okay, it ends off the week with an impulse, okay? So what it means to you is obviously you don't want to jump into buying or selling today on Monday, right? Because the market is still basically just an impulse, right? So when you only have an impulse, is going back to that impulse and correction idea. Don't move, wait, okay? So in the future, when you only see an impulse move, be patient, okay? So that's quite straightforward, right? The third one here is crawl, okay? So crawl is a reversal pattern, okay? It's telling you there's no energy, I'm tired, I'm probably gonna roll over. That's giving you the directional bias, right? So every time you see a crawl, it's a reversal pattern. It has a good 60 to 70% chance of reversing, okay? So I'm gonna give you some visual example as well, right? Over here, you can see fast up move, it starts to crawl, okay? Then after that, it U-turn, okay? It starts to come down, it starts to reverse. So a crawl pattern has two utility function, okay? One is if today you are a trend following trader, it tells you, hey, be cautious, the trend may be weakening, don't be too aggressive in buying up an uptrend anymore. Or if you're a counter trend trader, it's telling you, hey, start to pay attention, you may get a reversal very soon, okay? So depending on what style you are, right? Are you trend following or counter trend? The crawl pattern gives you this information, okay? Same thing here, comes down very fast, starts to slow down, it reverses, okay? So what this means again to you in the future, of course, if you see a crawl, okay, here, don't buy, right? Because the chance of this coming down is higher. Focus on potential sell trade, ignore buy trades, okay? That's what directional bias means, okay? Same thing here, as you can see a crawl, okay, it's coming down, but it's slowing down compared to this move. Don't sell anymore. Potentially, it may reverse. Focus on potential buy trade if you're a counter trend trader, okay? So not that difficult, quite straightforward, yeah? So these are the three patterns. Now, I'm gonna very quickly jump into the current market charts to really show you some of these patterns and the application of it. Then we'll very quickly open up for Q&A, okay? And see any questions that you guys have, right? So give you some examples that we have covered since last Monday, right? So today, I think all of you are joining here. Some of you are existing clients with Phillips. Some of you are maybe not yet an existing client, okay? But some teaser here, okay? Every Monday we are running a market outlook, except for today, right? Every Monday we run a market outlook with clients to share with them what are some of the opportunities to look out for in terms of the major currency pairs, okay? So last week, Monday before NFP, okay, we kind of cover some of the opportunities that we talk about, right? I still remember one of it is definitely the dollar CAD, right? I took this trade here as well. You can see the patterns playing out, right? First off, ignore every other label here. I just want you to focus on this pattern, right? Very fast move, very slow correction. What happened next? Very fast move up, okay? So that was before NFP itself, right? I mean, the Canadian dollar actually weakens before NFP, okay? And the NFP was this move, okay? So it actually moved this entire move actually took place from Tuesday to Thursday last week before NFP. Okay. What was the reason behind that move? To be honest, as a technical trader, I don't need to really know it. Okay, because why? I'm looking at patterns, right? Impulse correction, this here has a good chance of happening. Okay, now within the same chart, you'll be able to also identify crawl. Okay, take a look at this move here, right? Initially, it's coming down, coming down. It starts to slow. Okay, at least if you're not a counter trend trader, it's telling you please don't sell it here. Okay, there's a good chance of a bounce, right? And that's what happened after that on dollar CAD. So from now, right, you can see like patterns happening in the chart. And right now what we have post NFP from last Friday, we only have one straight down move, impulse. Don't move, okay? Don't go and buy, don't go and sell. But what you can wait out for is what we call a forecast. Now, suppose today, okay, not only today, suppose like for the next 1 or 2 days, right, all the way until maybe mid-week, you can see a corrective move here, meaning the market pulls back, but it pulls back slowly, correctively, okay, without any fit first, right? Just patterns, okay? Then what do you get? You get actually what we call a correction. So you then have a combination of an impulse, correction. You know there's a high chance this will probably drop again. That is where the opportunity kicks in, right? So you can realize here I have a directional bias, it's bearish, because after an impulse, if you can get a correction, we expect a down move. Okay, so not too complex, right? So if you take a look at euro dollar, okay, what do we have here? Now we can actually look at it from a bigger scheme of things, right? This entire move here is pretty corrective relative to what? Relative to this move. This is fast. This is slow. It's chopping around, right? You can see that. So this is a pattern of an impulse correction. General direction, we expect upside. Okay. Now we can then also play around with a little bit of an element of what we call multi-time frame or fractal in nature, which means from a bigger scheme of things, we can also look into the details of it. So you can see this is impulse. Okay, that's what happened post NFP. Okay, so if today moving forward, you know, by midweek we can get a pullback correctively, what do we have? Same thing, impulse correction upside. Okay, so ignore the flips first, right? Those are just additional layers to give me some price reference. But just based on pattern, we can establish the direction that we want to focus on. Okay, pound dollar. Okay, some charts are a little bit cleaner and nicer, right? So this one here, if you can identify it, okay, this is the impulse, very strong up move. This is a correction. Now this correction is not the best of all. Okay, it's not like the easiest correction to be identified, but in terms of price development, right? So you can see here, this move up here is about, if I put it, is about 490 pips. Okay, this move here is only about halfway of it, 260 pips. The time duration is about equal, okay, but in terms of the magnitude of price, this is only about half of it. Okay, so naturally this is corrective as compared to this move up. Okay, so naturally we are expecting a little bit more upside over here. Okay, so that's the application, right? Some charts are not clear. Here, okay, this one, okay, dollar yen. Okay, dollar yen had a very strong drop last Friday, right? Again, because of NFP. Now, if let's say right now we are starting to observe, right, this looks like a little bit of a potential V. Okay, so what do? You do nothing, right? Absolutely nothing. But if let's say this develops into a correction here, okay, so what it means is that, okay, it goes up a little bit more, and after that it decides to pull back down, okay, and then it doesn't really go a lot to the downside, and then it decides to pull back up a little bit. Now this is what we call correction. That will give us a high probability of a downside trade. Okay, so you can follow, right? Again, patterns are always there to guide us. So see this impulse, sideways move, upside. right? So gold, give me a very quick example over here as well, right? So you can see as this is developing, it looks what? Corrective in nature. It's not going up very fast, right? So short term, we are bullish. We are expecting a little bit more upside, but once this actually reaches this level, okay, when that reaches that level, this becomes a correction, then what we are expecting, there's a good chance this would drop, okay? So it can, using a very simple principle of impulse correction combined with patterns, okay, we can use it in a very simple manner. We can also start to layer it. Okay, layer it means you can see what I'm doing. We're playing with a little bit of a fractal nature, looking at bigger patterns, smaller patterns, but layering it with some key levels like Fibonacci's. Okay, but I want you to realize all of this comes back to the very basic starting point of impulse correction. Okay, so that's actually very important. Okay, so I hope today this aspect of impulse correction and the patterns combination will give you some ideas and insights to start working on. Okay, and again, as I mentioned, because of time constraint, and I want to allocate time for Q&A. Okay, in 1 hour, that's the part that I can cover. Okay, but next session that we're gonna have, as I mentioned, on 7th of August, 7th of August, yeah, right. We're gonna start to layer this, right? So we're gonna add on and continue from where we left off from today's session, and then add layers into the analysis on Elliott Wave. Okay, so let me very quickly see if you guys have any questions that you'd like to clarify based on what we've covered so far today. I have about 10 minutes to answer questions. If you have any, feel free to type it into the chat. Okay, type it into the chat, or you can type it into the question box as well, if I'm not mistaken. Okay, so yeah, this is a very good opportunity for you to type in and ask question. Okay, as I mentioned, I only have about 10 minutes to do it. So if you have any, type it in now so that we can start to answer the questions that you guys have. Okay. Questions over here. First one is from Richard. What is the optimum time frame period for reliability? Now for me, we run by, okay, so you have a part in terms of like stocks and indices, right? Now if you're trading, basically I would say Elliott Wave is best used mainly for swing style. Okay, so swing style trading means your time frame ranges somewhere between like H1 to H4 to sometimes daily. Right? Now, for me personally, I work a lot on the 4-hour time frame because that fits my style, that fits into my trading approaches and things like that. If you're looking at indices or stocks, right? Stocks, because they are not 24 hours, they are not like FX. Okay, you might sometimes experience gaps, right? Let me maybe just open up very quickly. Let me choose one of the more popular one. Okay, Tesla, right? So you can see here there are gaps, right? There are gaps, right? To me today, you want to, if you're looking at stocks, right, you want to visually train yourself to fill up the gaps with just a line, right? So I always say this: if you can't decipher what the gap is, just change it into a line chart. There's no gaps, okay? And then look at this, right? This entire move is what? Impulse. It's fast. This is fast. This is slow. Therefore, the upside is higher chance, right? It happened. So if this one here starts to come back down and does a correction here, then you can expect Tesla to continue high. Okay, and of course, if you want more details, you just change back into a candlestick chart. Okay, so primarily work on maybe for stocks, right? Because it's not 24 hours. You may want to consider looking at potentially even the hourly, right? So you can get more data feed to work on. Okay, but to me, that's the time frame that I would suggest, right? Anything lower than that, unless you're very experienced with Elliott Wave, it can get very, very challenging fast. Okay, so you don't want to jump into lower time frame if you're still new to this principle. Okay, yeah. So the optimum time frame to conclude is H1, H4, and daily. That's the primary field. Okay. Zhen Hao has a question here as well. Can this pattern be applied to 1 minute chart? I think I can talk about it a little bit, right? Now, if today you go to a 1 minute chart, there are elements of this pattern, right? So if you take a look at this here, this is a crawl, this is an impulse push, right? A reversal. You have this down very, very fast as a strong impulse. You have this little sideways correction here. It continued down a little bit. Then this whole thing here may develop into a little bit of a crawl, a little bit of reversal. Now things on a smaller time frame develops and evolves very fast. So if today you want to apply on something like 1 hour, 1 minute, okay, you can. But again, as I mentioned, you need to be very, very confident in the principle of it, and you shouldn't be like, let me refer to my notes, right? What is this pattern? What is it happening now? Is this impulse and correction? Now, if you need to still do all this of reference, you need to practice more, right? And if you're in that phase, my suggestion again is don't attempt to challenge it. I would say, you won't go and like in a game environment, right? Analogy, okay? You won't go and fight your ultimate boss if you're not at that level yet, right? You need to train it up, equip yourself with the right equipment, and then you go and challenge the boss, right? You have a higher chance of winning. Put that into the scenario of trading. As I mentioned, if you're fairly new in terms of this principle, okay, in terms of like impulse and correction, understanding in terms of Elliott Wave, don't put yourself in a very, very difficult environment and try to trade and counter the 1 minute chart, right? Or conquer the 1 minute chart, right? Focus on the easier one first. And once as you gain confidence, you can build down into the usual time frame that you look at, maybe on 1 hour, 1 minute, or 5 minutes. Okay. Good. Okay. So Lily here has a question as well. What time frame for gold in second half of 2023? Right. I would say if you're looking at half a year, naturally you want to be looking at the daily scale. Okay. Now if you ask me on a kind of like half a year kind of outlook, okay, I will work on the daily scale. And just to very quickly share with you my long-term direction and my long-term interest on gold is upside. Okay, obviously it doesn't mean that it's gonna go up from here on today, but the long-term goal, right, which means, as you mentioned, half a year to a year time frame, I'm looking at upside. Okay. Okay, I think a few of you is asking whether the sessions are recorded. Do you get a replay? Okay, so I think those are also answered already. The sessions are recorded, and you'll be receiving the replay to reference back if you want to. Okay. Good. Okay, so I see another question here from Ho. Ho is asking, when you look for the tree patterns, do you also look at higher time frame trend? The answer is yes. Okay, that's where I did mention you want to layer up your analysis. Okay, so you don't only just look at the pattern independently, right? By itself, it gives you a certain probability and accuracy, but the more you layer, okay, meaning you add on various forms of understanding, in terms of context, where is this pattern happening, right? Where are some of the key levels to look out for? That would increase your probability, right? And that's something that I do as well. Okay. Great. Okay, good. So I see one, okay, we'll probably not be able to take everything as I mentioned, right? But I see one question over here asking from Irene. Okay, let me see. Do we have that here? Okay, let me very quickly see if we can pull out the charts for you. Okay, I think we don't have it here, right? Okay, so yeah, so we don't have it there, so I won't, sorry.
Actually, we do. JD under Hong Kong Exchange, you may need to
I can't, or did I miss it?
scroll further.
Because this is the list.
Yep, if you do a search on it.
Oh, okay.
Yeah, you go.
Yeah, so it's hidden. Yeah, because this is quite popular, so maybe it's hidden just now. Still can't pull it out. Okay, sorry. Yeah.
If you go under view,
Yeah.
the market watch panel. Oh,
Yeah,
then I
it's
think that would be the latest. You could scroll all the way to the bottom and then just type JD. It should lead you there.
I think this usually we need to, oh, okay, good, good. So
Yeah,
it jumps
just
up.
enter it. Then you got
Okay,
to right click and open charts.
cool. Okay.
Yeah, I think that's a
Yeah, so
good option also in case
I'll very,
those
very
are wondering
quickly
as well.
talk about this since you asked, right? So I just want to show you the application of how this impulse and correction can quickly work on that, right? So thanks EJ for pointing this out. Good. So you're asking about the trend, right? So very, very quickly, I just shared. Usually I'll play around with H4 and daily, right? So obviously on the daily is moving down, right? But based on what we've covered today, the first observation I have is this seems to be a little bit of a crawl nature. Primarily, I won't be aggressively selling it anymore, even though we are technically still in a downtrend. Okay, I'll be more inclined to look for a buy. Okay, however, again, today we haven't really covered in depth onto that. You need to be clear in the setups, right? Which is a timing element, right? We have a general sense of direction. Based on this, I'm not so keen in selling. I'll be more interested in buying. But when I get in, where I get in, that's where the timing kicks in. Okay. So this one here very quickly, just to share with you based on what I see on the daily, I will not focus on aggressive selling. I'll be more inclined in look for buy. Even on a 4-hour chart here, I don't think it's time to buy yet. This may maybe come back down a little bit, retest the bottom, or then break a little bit, and then from there it can still bounce back up. Okay. So this is again just based on what we covered today, patterns, right? It gives you that first base of analysis, and we naturally still need to add on to things, right? So hopefully that gives you an answer. Okay, good. We still have a couple of questions, but again, as I mentioned, time constraint, I won't be able to answer all. Well, again, some of you are asking related to market outlook. Okay, just want to very quickly touch on this where every Monday, except for today over here, right? So every other Monday we run a session on market outlook. Okay, from 12 p.m. to 1 p.m. I always cover some of the common currencies and instruments. Okay, and we often open up this session for questions as well, right? So if you have any particular trading related questions or any particular instruments that you're trading and would like me to share my view, that's the session that is something that we do, right? Live. Okay, so it's on the spot, perform an analysis, share with you my view. That's how we do it. Okay, so for those of you who are interested in something like that on a regular week-to-week basis, to keep yourself updated and informed the market, okay, feel free to find out a bit more information from Phillip, okay, from the team, in terms of how you can actually become a client and then join us for this regular Monday session. Yeah, so I understand I still see some questions over here. We'll work them out, how to actually get the answers to you guys. Okay, but for time constraint, I'm going to pass it back to Yijie first.
Cool. Hey, thanks so much, Kar Yong, for sharing with us. Again, I think once again, each of your session, I learned something new, right? And today, I think the key takeaway for me is that don't be too caught up in pattern recognition. Recognize it as impulse and correction as the kind of market structure, right? I especially like the portion where you share a bit about how you can give your chart pattern names, right? And that's how you recognize them. So that's awesome. Right, so as Kar Yong has alluded to, we are doing this on a weekly basis every Monday from 12 to 1. So this is great news for those of you who have enjoyed today's session. Just to let you know that this is not a once-off, there is more upcoming. And on my screen right now, I flashed the dates which we will be doing these sessions. So the upcoming one is 17th of July. And as Kar Yong also mentioned earlier, on the 7th of August, he will go into the second part of the series on his trading strategy session. So for those of you who are not yet clients, right, how can you participate? So this is an exclusive client-only session where we disseminate the information to clients of Phillip Nova. If you are already a client, right, you would have gotten these details in your email inbox. And all you have to do is just to sign up early and reserve your slot, right? At the beginning of each month, we do send out an email of the slots ahead of time so that we can lock in your schedule. So, you might be wondering, what can you expect from these sessions? There was a preview earlier, when Kar Yong shared the couple of opportunities that he has touched upon. But in these sessions, we jump straight to the charts, right? We keep theory out of the session because we know that for traders, right, what we want to look at is the opportunities available. So in the past couple of sessions, it has always been a jump straight to the chart approach. Right, so we highlight popular pairs for Forex and CFDs as well. So what differentiates this session is also that you can engage directly with Kar Yong. So we've always experienced this, right, where there are questions that are streaming in and such a pity we don't have enough time to address them, but not to worry. There's a few ways that we will address them in the follow-up email that we'll send you from today's session. It will contain the preview of today's webinar and the couple of questions that has been asked. Of course, for the ones that require longer explanation and illustration, Kar Yong might take it across to his next session, especially those pertaining to market outlook on certain contracts that you want to know his view on, right? So those sessions will be key for you to attend and to be in the know. Right, so over in these sessions, we also share the latest developments on Phillip MT5. So last week, we actually launched 73 new contracts and a new market, right? So we have the German market. Currently, there are 4 key markets on MT5, US, Singapore, Hong Kong, and German. So over 580 contracts available for you to trade. And we also share exclusive giveaway and promotions that are only entitled for attendees of this session. Right, so this is a screen capture of what Kar Yong does on a weekly basis, and following that up with a market report. Right, so that's something that you can see. So what kind of exclusive giveaway am I talking about? So one example of that is there's a course, a FX trading e-course conducted by Kar Yong personally. There are 7 core modules, right, covering very key topics such as fundamental analysis, technical analysis, and so on and so forth, right? So we are doing a giveaway with a lifetime access to this course, but how can you be entitled for this giveaway? Join us in the next session to find out, right? So for those of you who are still contemplating on whether or not you should, if you don't already have an account with us, whether you should or not, this is an added push for you, right? So from the period of 1st June to 31st July, we are running this giveaway. So for our new to Phillip clients, right, what you do is you open an account, you fund a minimum of $4,000, and these are the gifts that you are entitled to select, right? Netflix, Disney Plus, Spotify, and iTunes. Netflix definitely is a hot product that many people are looking at. So if you're already a client with us and you have not joined us in the past sessions, there's also something for you in this 40th anniversary. We are conducting a lucky draw once every 2 months, and the top prizes, as you can see, is an iPad Pro, Samsung soundbar, and dining and spa vouchers from different hotels. Right, how you can accumulate your chances, you can see over there. Scan the QR code to find out more details. Right, so lastly, I just want to touch a bit on Phillip MetaTrader 5 as a platform. Why should you trade with Phillip MetaTrader 5? So for those of you who do not know what is that, that was the platform that Kar Yong was demonstrating with earlier. Right, I just want to share. Currently, we have one of the most comprehensive one with over 580 contracts available for your selection. It is fully zero commissioned, including the share CFD. We have competitive spreads, micro sizes available for global indices, right? So certain key markets we offer, like Hong Kong and Singapore, rarely do you see them available in sizes of 1 unit. So this is also available on our platform. we have integrated with various trading tools, right? Some big names out there, award-winning trading tools like Equity Signal Center, Trading Central, and we have also FX Street News, which gives you up-to-date news push so that you can view everything from one platform. You don't have to toggle your screens, go to different sites. There are economic calendar, up-to-date news, institutional reports, and even pattern recognition tools, all available on our platform. So we also do have a strong support team, right, that is available for you in 24/5. And last but not least, for those of you who wish to have a preview of the platform, we do have a free demo environment. If you will scan the QR code, you can download a demo. So this will give you up to 100K of virtual funds for you just to test the products available, trading mechanics, just to take it on a test drive to see if you enjoy it, right? So of course, we know that you may have some more questions that you would like to ask. Do feel free to contact us either by our hotline or our email address. And last but not least, we want to thank you all for taking time to send us your questions and also to attend today's session. We hope that you gain lots of insights from today's webinar. So once again, thank you and have a great day ahead. See you next week.